Hey everyone, before we dive in, make sure to hit that like button and subscribe. Trust me, you're going to want to see this story through till the very end. There's a storm brewing in the world of real estate, but it's not the kind that hits the headlines every day. It's quieter, slower, creeping into every city street and skyline, and yet most people don't even realize it's happening. I'm talking about the collapse nobody's really talking about, the commercial real estate crisis. Think about the office buildings around you. The empty parking lots, the once bustling lobbies, the shuttered storefronts. To most people, it looks like just another empty space. But behind those walls, there's a story that could shake the economy and your life more than you think. Here's the truth. The commercial real estate market has been living on borrowed time. For decades, investors poured billions into office towers, retail complexes, and industrial parks, betting that the flow of money would never stop. But life, as we know, has a way of proving even the smartest bets wrong. When the pandemic hit, everything changed. Offices emptied overnight, shops closed, malls that once thrived became ghost towns, and the numbers, they're staggering. In some major cities, office vacancy rates have skyrocketed to levels we haven't seen since the 1990s. The very buildings that were once symbols of prosperity are now liabilities. Banks and investors who once saw these properties as golden tickets are starting to panic. Loans are going unpaid. Developers are stuck with empty towers and massive debts. And here's the scary part, there's no simple fix. The market is oversupplied. People aren't coming back to offices at the same rate. Retail is changing forever. And every empty building represents not just lost rent, but lost value that can ripple through the entire financial system. And it's not just a local problem. It's global. From Manhattan to London to Sydney, the pattern is eerily similar. Cities built on commercial growth are now facing the harsh reality that the model may no longer work. Landlords, banks, and investors all over the world are asking the same terrifying question. What happens if these buildings never fill again? But let's step back for a second. This isn't just about numbers or vacancy rates. This is about people's lives. Office workers who once walked into high-rise towers every morning, retail employees whose livelihoods depended on bustling shops, even city planners whose budgets counted on tax revenue from thriving commercial hubs. A collapse in this sector doesn't just touch Wall Street, it touches Main Street. Some experts are calling it a slow-motion disaster. Unlike a stock market crash that happens overnight, the commercial real estate crisis is creeping in, quietly eroding value, destabilizing banks, and threatening retirement funds, pensions, and savings. And because it's slow, it's invisible to most of us until it's too late. Now here's where it gets even scarier. You might think, well, empty offices, big deal, people can work from home, right? Sure, but the problem isn't just empty desks, it's the domino effect. Empty offices mean lower rents. Lower rents mean developers struggle to pay off loans. Struggling developers mean banks take massive hits. Banks take hits, and suddenly the credit that businesses and individuals rely on dries up. It's a chain reaction, and it moves faster than anyone wants to admit. And retail isn't faring any better. Big malls and shopping centers are facing the harsh reality that online shopping isn't going away. Stores are closing, landlords are desperate, and investors are fleeing. Some of these properties were leveraged with massive loans, assuming decades of steady income. That assumption has shattered. Even industrial real estate, the warehouses and distribution centers that boomed during the e-commerce surge, has its cracks. As logistics costs rise, interest rates climb, and global trade faces uncertainty, these assets aren't immune. The so-called safe bets are suddenly starting to feel very risky. So why hasn't the media been screaming about this? Partly because the numbers are complex, and partly because the problem is hidden behind layers of finance and debt that most of us don't see. Banks and investors are quietly adjusting their exposure. Governments are hoping that the market will self-correct. And meanwhile, the empty buildings continue to stand like silent monuments to a system that might be broken. But cracks don't stay hidden forever. And as rents continue to fall, loan defaults rise, and vacancies climb, the question becomes not if, but when the dominoes start to fall. And when they do, it won't just be a sector that suffers. Cities, jobs, pensions, and savings could all be caught in the fallout. Let's get real about the numbers. In some major cities across the US, office vacancy rates have hit over 20%, and that's not a temporary blip. In downtown Manhattan, entire office towers are sitting mostly empty, with some landlords offering months of free rent just to attract tenants. London's West End is facing similar pain, with historic office spaces struggling to find even small companies willing to sign leases. Sydney and Melbourne. The story is the same. Buildings that were once gold mines are now weighing heavily on investors' balance sheets. And it's not just big cities. Secondary markets, smaller towns, and suburban office parks are collapsing even faster. These properties were often financed with higher-risk loans, assuming strong occupancy. Now, as tenants vanish, banks are stuck holding properties worth far less than their loans. Some experts are warning that we could be looking at the largest wave of commercial real estate defaults in modern history. Take, for example, the sprawling malls and shopping centers. Once symbols of consumerism, they're becoming symbols of decay. Foot traffic has evaporated. Retailers are closing faster than ever. Some investors are abandoning properties entirely, leaving empty structures that cost more to maintain than they earn in rent. In some cases, landlords are literally giving buildings away just to avoid bankruptcy. It sounds unbelievable, but it's happening right now. And the human impact is staggering. Jobs are disappearing. Businesses are folding. Pension funds, heavily invested in commercial real estate, are seeing their value plummet. People who thought their retirement was secure may soon discover their nest eggs aren't what they expected. This isn't just numbers on a spreadsheet. It's people losing stability, livelihoods, and security. Some developers are trying creative solutions, repurposing office spaces into residential units, turning malls into community centers, or converting warehouses into fulfillment hubs. But these fixes take time, and not every property can be saved. The truth is, the scale of the crisis is massive. Even the most innovative ideas can't turn every empty skyscraper into a profitable venture overnight. The financial system itself is feeling the tremors. Banks that lent billions to commercial real estate are now carrying toxic assets. If enough defaults occur, the ripple effects could hit everything from mortgage rates to consumer loans to small businesses trying to secure credit. In other words, this isn't just a problem for Wall Street. It has the potential to touch Main Street in ways most people aren't prepared for. And yet, despite all this, there's a strange calm. The media doesn't scream about it. Politicians issue vague reassurances. Investors hope that interest rates will drop or that tenants will return. But history tells us that ignoring slow-motion disasters doesn't make them disappear. It only makes the eventual crash more painful. So what does the future hold? Some analysts believe we're entering a reset in commercial real estate, a reckoning where poorly performing properties are liquidated, and the market slowly adjusts to the new reality of remote work, online shopping, and shifting global trade. Others warn of a more chaotic scenario, cascading defaults, bank stress, and widespread financial disruption that could echo through the global economy. And here's the most unsettling part. This isn't theoretical. It's already happening. Across the US, UK, and Australia, reports of loan defaults, distressed sales, and abandoned properties are climbing. Every empty office, every shuttered store, every abandoned warehouse tells the story of a system under pressure. The collapse isn't coming, it's quietly underway. So what can be done? The truth is, there's no single solution. Governments can intervene, banks can restructure loans, and developers can innovate. But the fundamental shift in how we work, shop, and live is real. The commercial real estate landscape that shaped our cities for decades is being rewritten before our eyes. And whether we're ready or not, we're all part of this story. If you're watching this and thinking, "This doesn't affect me," think again. Your retirement fund, your job security, your local community, every piece of this ecosystem is connected. When the commercial real estate dominoes fall, the impact will be widespread and unavoidable. The collapse nobody talks about is happening right under our noses. Empty buildings, defaulted loans, and vanishing tenants, they're all signals of a market in crisis. And while some may survive or even thrive in this new landscape, many will not. So keep your eyes open, stay informed, watch how your city's commercial spaces evolve or don't. Because what looks like just an empty office or a closed shop today could be the first sign of a much larger shift tomorrow. If this video opened your eyes to something you hadn't considered, hit that like button and subscribe. We'll keep unpacking the stories that matter, the crises hiding in plain sight, and the real impact they have on our lives. Don't miss out. You owe it to yourself to see what comes next.